Hey traders, welcome to our Tuesday pre-market show. I'm Raghee Horner. Thanks for joining me. We've been doing this show every morning from 9 to 9:20. And so what we're going to be doing here is preparing for the bell, whether that be some day trading nuance, whether that be the economic calendar, whether that be even some longer term setups, which I really have in mind right now in this environment to take us through the remainder of the year. We should be good to go. All right, excellent. Okay, let's do this. By the way, if you're catching this on replay, feel free to leave a comment. I do check the comments. I think I have to go back and check yesterday's show comments. But if you do have a question or a comment, feel free to leave them. I will go back and take a look. Yes, that is my text. That is a text number that you can reach me at for questions or comments as well. All right, let's get to it. A lot of questions about gold. So let's kick this off with a look at gold. It's the number one symbol on my list. And if you checked out the free video, now every night we have videos that we put out here at Simpler Trading, and there's a number of free videos. If you're joining us on the YouTube channel, well, on that very same YouTube channel for Simpler Trading, you've got the free video for options, the free video for futures, and the free video for Fibonacci. The last 2 days, I've been doing all the free videos for options and for futures. So that gives you a really good idea of what I've been looking at Friday going into gold, that overbought zone and looking for a move lower. And then yesterday, we talked specifically about what I want to do today. And we're seeing exactly what I was hoping we would see. So if you take a look at this chart, let's zoom in here. You don't need to look at my mug anymore. There we go. All right, so take a look. This is known as an inside day, all right? And let me pull it up on a layout that some of you may be a little bit more familiar with, and that's the grab layout. Now, the grab candles that I have running on these charts, if you're brand new to them, these are free tools, the grab candles and the wave. I've got some other tools on this chart. If you have a question about the tools, let me know. Kendrick says, I didn't know this was a thing. It is a thing. Yes. Every morning from 9 to 9:20 thing. So welcome. I need to make shirts that say this is a thing. The pre-market show. I like it. I like it a lot. So I like Fibonacci extensions as well. I sure do. I think if we have a clean last major move, but if we have one we can take a look at, let's do it. All right. So anyway, looking at the daily time frame of gold, what we have here is that 3x daily price movement range. Now, what is a daily price movement range? Every single market, if you have a certain look back, that's just how much price action you're taking into consideration. You probably already know what this is because if you've used a moving average, the period setting on the moving average, the length, is your look back. If you're looking at a 200 period simple moving average, your look back is 200 periods. So the look back on this daily price movement range that I'm referring to is 6 months. What is the typical range for gold, session to session? And we talked about 40 to 42 points. We printed almost 120. I think it was 118.1 yesterday. That is a dramatic, or what I call a reaction candle. Now, since that is a reaction candle, a dramatic move, yes, we can step in and buy some GLD calls. And that is something I bought a little bit of yesterday. And specifically what GLD calls, January 15, the 173 calls. I bought those on average for about $6.70 to $6.85. And I'm willing to take a little bit of heat, unrealized loss on those this morning. And I'll look to complete my position with today's inside candle. This is exactly one of the two patterns that I want to see. This is a candle that tells me the sell-off has taken a break. Market participants aren't quite sure that they want to run back into gold, but they're pretty certain they don't need to drive it back down below those two Darvis levels, those dotted orange lines that you see on my chart there. So that's where we are in gold, gang. I am a buyer. I'm bullish. This is an oversold zone. And the way that I'll handle the uncertainty, again, uncertainty after a 3x move to the downside, what I'll do is I'll look for GLD calls. So that's something we did yesterday, and I'm going to continue to build that position into today's price action. All right, next is, well, let's take a quick look at the calendar. So 2 calendars we'll take a look at, actually 3. 3 calendars. Now, if you've been catching our pre-market show since the beginning, this is now entering the third week of our pre-market show. 3 calendars I'll look at. One is the estimized calendar. Even if you trade futures indices, you need to look at the estimized calendar. And the reason for that is a lot of heavily weighted stocks can influence the movement of the underlying futures. Now, yeah, I can see what's coming up in the near term. AMAT, Cisco, Disney, Home Depot, etc., Walmart, Lowe's. We have a lot coming up. I want to be aware of that because that's going to potentially influence my day trading. But what I'm really interested in, so what I do, and you'll hear me flipping through this probably on the mic here, because I like to write down a lot of my notes. So if you go out minimum of 6 weeks, right, let me show you what I mean here. Where I'd like you to start your scans for earnings is not for this week. It's for, and it may not be practical at this stage in the earnings season, but remember this for next earnings season. We do this 4 times a year. So as we take a look, 1, 2, 3, 4, 5, I want you looking out 6 weeks. So clearly, when we get out into the end of December, and we actually have some earnings. So you might ask, well, Rog, what are you preparing for now? I'm preparing for Salesforce. I'm preparing for AVGO, AutoZone, Costco, Oracle, FTX, Nike. I'm preparing for those. I'm actually looking at WBA. I'm actually thinking about next year's earnings season. I'm already thinking ahead to JP Morgan, PNC, and Schlumberger. In other words, 6 weeks out, I'm going to start thinking about what markets are in uptrends and how can I take advantage of those uptrends. 6 weeks out, I'm going to start looking at whatever data I might have, for example, on Nike, and look at the expected numbers. I'm going to start to think about what the, for example, what the consensus might say about the next earnings go round. What do I want to know about the consensus? Where do I want to know about those whisper numbers? Consensus, Wall Street consensus, company guidance if it applies, and then that whisper number. Estimize is going to help you with the whisper number. I've been promising to do a little bit of a deep dive in earnings, and it might seem strange to talk about them now, but now is the time you want to start thinking about that next round of earnings into January, right? So I don't care about really much of what's remaining of this earnings season. I'm already thinking about the next earnings season. I'm already building my watch list for that. Think about earnings way further out than 2 days out, 2 weeks out. Think in a bigger picture of what you can play the run up into earnings on. So I've been promising a little bit of a deep dive on Estimize. There you have it. And that's one of 3 calendars we'll take a look at. The second calendar, and not in any particular order, I'm going to head on over to Trading Economics, mainly because tradingeconomics.com, that's the website. These are all free resources, gang. Tradingeconomics.com will oftentimes have data for countries that I might be trading the ETF of. For example, I've got positions in France. I've got an EWQ position. That's a French MSCI iShares country ETF. So I'm going to be interested in the data coming out of France, creating volatility, maybe my follow through or my entry opportunity. So I'll keep an eye on that. I also have exposure to Italy, so I'll keep an eye on that one. Then I'll also look at if there are any Fed events. Other calendars will sometimes gloss over Fed events. They'll focus on Williams, they'll focus on Clarida, they'll focus on Powell, but they might not list Quarles. They might not list Brainerd. So Trading Economics is good for that more full look at countries, especially if you have exposure to the country ETFs, which I do actively, and also for specific Fed events that may not be listed on the final calendar. So we've gone through Estimize, we've gone through Trading Economics, and now we're going to go to Forex Factory. Forex Factory is the easiest to scan. And again, these are things that you can do well before the open. I really encourage you guys to look at it. And I'm just going to see here, is there anything significant? JOLTS, job openings, you can see there. JOLTS at 10 a.m. The JOLTS is not a major number. Very little data, really, economic data has mattered as of late because we're so much more interested in other data points. So while that is a number that I'll have to at least be aware of in terms of the timing of the release, what's much more interesting to me is as I make my way over to the Simpler Futures room, and today we're going to do some day trading as we do in that room. I know at the end of the clearing period or the opening range, that 9:30 to 10 a.m. window right after the bell rings, at the very end of the range, when I'm looking for clearing range breaches, when I'm looking for those opening range breakouts, that Jolt's job opening is going to insert a certain amount of volatility at that moment in time. So I need to be much more aware of that particular event. And then Forex Factory did actually have Quarles and Brainerd. That's great. And then I do have exposure to the New Zealand dollar. Now I don't do so. Scott, thanks for the comment about the Forex trading. I haven't been doing as much Forex trading as of late. I love Forex trading. I started Forex trading in late 1999, early 2000. My 3 books are on Forex. I'm a huge fan of macroeconomics. I'm a huge fan of those huge cycles, understanding what central banks do to all markets. And Forex was just such a great hand in glove fit to that. However, I have not been as actively trading Forex. There's a few markets that I am interested in, namely a short US dollar is probably my number one short, and long New Zealand dollar is my number one long. Luckily, we have futures contracts when the US dollar is in play that we have an alternative that we can use. That US dollar play means we have also ETFs, currency share ETFs, that we can look at as well. All right, so with that being said, I do have a fairly significant long position in the New Zealand dollar, the 6N, and also the New Zealand dollar US. So that 8 p.m. event with the Reserve Bank of New Zealand is going to be something that's on my radar. So if you're a multi-asset class trader, this kind of thorough look at the economic calendar is absolutely necessary. Cover your earnings, cover your Fed speeches, cover your global economics if you've got exposure to those country ETFs, and then take a quick look at Forex Factory for any events that could affect anything else that you might have missed on the other 2 calendars. I find this one just aesthetically easier to scan. Somebody asked me yesterday how all my backgrounds are black. I darken my backgrounds. Somebody asked me yesterday, I use a little app called, you can see here in the corner, not app, what do you call these? Extensions. I use a little extension called Dark Reader. So my charts are dark. They've got a black background. So that contrast between a light colored background on a website and the dark colored chart became too much. And so I use a program called Dark Reader to darken up all the websites that I watch. So somebody asked me about that. So there you go. That's what I use. All right, over to the charts. We've talked about gold. We've talked about the economic calendar. And now I want to take a look at, now let me take a look at some of the questions here. So thanks for that. Thanks for the comment, Scott. Yeah, right now, dollar weakness and New Zealand dollar strength. And what else do I like? I like Canadian dollar strength. I like euro and I like pound, not Australian dollar. Be careful with the yen. I think if the equity markets continue higher, the strength that we've seen in the yen versus the dollar, US dollar, could start to wane. So be careful there. All right. So would I wait for the completion of an inside candle or wait for, so what do I do with an inside candle? No, I seldom wait. That's a great question. Thank you, Smook. Do I wait for candles to close? I never want to say always and never, but I never wait for a candle to close. And here's why. The inside candle really is giving me a temporary look at narrower. Let me zoom in here and show you what I mean. This is giving me a look at narrower volatility, and that's exactly what I want in order to have an edge in buying my GLD calls for as little premium as possible. If I wait for that candle to close and then tomorrow I end up with greater volatility, I'm going to lose my edge in the premium. I'm looking for inexpensive premium. I'll lose my opportunity to get a deal, right? I think that's something that options traders need to think about. I'm not thinking always about the timing. People think, well, options traders who are always looking for timing are kidding themselves. I'm not looking for timing in that I know it's going to happen at 1860 or I know it's going to happen at 1900. That's not the timing I'm talking about. I'm talking about that for a brief window of time in a given session that the market is trading in such a way that the volatility has contracted just a little bit. Because remember, one of the three elements that we pay for in our options premium, of course, time to expiration is one of them. Strike, how close to current price action are we? But the third element, and the one that stings most options traders, is they pay for volatility. They pay too much for volatility. So if there's anywhere that I'm going to try to reduce my cost of premium, it's going to be that volatility element of the options pricing. So I do not wait. I do not wait. All right. So thank you for the question. That's an excellent question. All right. What else do we have here? Boy, this 20 minutes sure does fly by. I really, really appreciate everybody, coming out and hanging out with us during these pre-market shows. It's just something that we've started doing here at Simpler. I was sort of doing it on my own for a little bit, just sort of as a way to just kind of kickstart my morning, and coffee sometimes helps, but it's nothing like getting on the mic and talking to traders about what we're going to do today. So it's really sort of my game plan for the morning. All right. Next is, do I ever trade the Dow or the Nas? Oh gosh. Yes. Every morning I'll take a look at now when you say the US 30 or the Nas 100, NQ futures, YM futures, the QQQ ETF, the DIA ETF, the options on those, absolutely. Even the micros, right? The MYM or whatever the micros are. I can't recall the symbols, but I don't trade micros that often. But however it is, you want to trade those, even if you're abroad and you're using the contracts for difference, sure, the CFDs. I absolutely do trade the futures, the options, and the ETFs every morning. So partly what I'll be doing this morning, sure, you know what, we have a little bit more time. Let me show you what I'll be doing with the broader averages this morning. Okay, so when I take a look at the NASDAQ, notice I've got my daily on the right side. I've got my 1 minute on the left side, and I'm looking at whether or not we're going to see a gap. And if you recall yesterday, I said, look, the market's kind of getting out ahead of itself. Let's not buy at these highs. We're going to have a gap this morning, gang. We're going to have a gap down on the NASDAQ this morning. And that's actually going to get me pretty excited for a potential buy. When I get on over to the futures room, for those of you that are going to be joining me there, and those of you that are in the options room, we talk extensively about re-anchoring our volume-weighted average prices. We're landing right in that VWAP. This could be a pretty decent little oversold level, but I'll be looking for a gap fade buy. Yesterday, the markets got very ahead of themselves on the narrative with the vaccine. Are we going to see as big a gap on the ES? No, in fact, we're not really going to see much of a significant gap at all on the ES. The NASDAQ, remember, did not benefit from the vaccine narrative because there's no real exposure to healthcare within the weighting in the stocks of the NASDAQ. So it's a tech conversation. Also think about the work from home tech wreck that we are going to see temporarily, because the NASDAQ well, if you're looking at the individual sectors or the broader index, the NASDAQ is where a lot of those stocks that benefited from work from home throughout the year, that's where they're residing. So when those stocks sell off, I think Peloton lost 20% yesterday. You're going to see Zoom head lower. You're going to see a lot of those stocks that are tech stocks, NASDAQ related stocks. So NASDAQ's going to take it on the chin pretty hard. Probably as dramatically ridiculous as the gap up was yesterday, that NASDAQ reaction is probably too much. So the only market that I'll look at for a fade on the morning will be the NQ and the different sectors within the NQ. So heads up for that. And remember, the NAS is going to behave in a way very differently from the S&P and the Dow for a bit, because the S&P and the Dow have exposure to healthcare. The NAS does not. The NAS has exposure to all those stocks that benefited from the last 8 months of work from home and the tech strength that we saw with the COVID related lockdown, quarantine, whatever you want to call that. With all of us working from home in our pajamas, those stocks are going to definitely take it on the chin. So heads up, be very choosy now about which stocks you want to continue to buy. If it's a stock that you believe benefited from lockdown, I think Peloton's one of them, right? I'm not a huge Peloton fan, never was. Great trading stock, not a great bike if you love it, but I'm not a big fan of what they were doing because they benefited from having the right product for the right time. The time changes, so does their model. ZM, be very careful about some of these stocks, okay? Yeah, and you know, they got hit hard, and for good reason, But gap fade on the NQ. All right, gang, I've got to go to the futures room. My options folks, I did the premium video last night. Check it out. That's pretty much my game plan for this week. Let's go do some day trading here and see what kind of opportunities we have on the morning. Break down the individual sectors if you can't find opportunities in the indices. All right, so that 20 minutes just flies by, but thank you so much for joining us. Maybe in the future we'll expand the time or do something. Leave your feedback, leave your comments and questions, because I'll make sure I cover these in upcoming shows. All right, thank you for joining me. Thank you for being a part of the community. And be safe out there. We're going to see some volatility, okay? We've got an exciting year, I think, to wrap up, but we don't want to risk too much right now while the markets are still trying to find their footing with all the news it has to digest. All right, gang, be good to each other. I'll talk with you soon.